Okay, I found. So can you see my presentation? Okay. Okay, the floor is yours. Okay. Well, this is for IFRS 1. Based on what I saw, it is the same thing for SMEs. Probably in the disclosures, this is where we have the difference. But let's start. What's the goal of the IFRS 1 is to facilitate the change of the standard. If we have a local standard, or even you have US GAAP, and we want to go to IFRS or to any other standard, the objective of this standard is first is to facilitate the change by giving some options. So to reduce all the structuring work of previous years or fiscal years, and then to have some standards to disclose the effects. What are the effects that happen if there's need to reconcile and justify? So what's another objective is the financial statements could be comparable. That is, the financial statements must always be compared to other financial statements so they can be useful. If we have 2021 financial statements under IFRS, they should be comparable to the financial statements of 2020 under IFRS. So we have all the rules and standards in order to be able to compare the fiscal year of 2021 versus 2020 under IFRS. And besides this, the standard wants you to compare 2020 with 2020 under the previous standards. What's the idea of this? If an investor, because let us remember, and I want to insist on this, the standards are done for the public in general, for the general users, not for internal purposes. For internal purposes, you may have all the policies you want, and even you can use these standards, but they are not aimed at that. Why? Because internally, they may have all the information and carry out internal analysis, and the standards are not used. But this is used when they go outside from the entity. So someone issued financial statement under a previous standard. Could be the local standard, US GAAP. So you have to compare what the public knows about you with the new information that you are stating. Because if you issued the financial statements under local standards as of December of 2020, so you have to compare what was with what was originally analyzed. So the objective is to have standards. You cannot put all those standards. You have to do a series of steps. First, you have to inform that you will do it because it's the first time. Secondly, you have to compare. You have to compare with the previous and current standards, and IFRS also compared to other fiscal years. And then, why do we have to have like 3 fiscal years? Well, really, we have only 2. But we have to use a third one because the financial statement, the P&L statement, which is the difference between the capital and another capital. So the difference between 2020 and 2021 will be there. We'll see the 2 financial statements, and by difference, you will see the result. But what happened with the result of 2020? So we need to have the financial statements on 2019 in order to compare it to 2020 and determine the results of 2020. So here well, this is the objective. So this is the idea of the standard. And we have the same thing, the scope, for the first financial statement and even the first intermediate reports, because the companies that go public have to issue intermediate financial statement. It could be the case of a stock market, that a company that is public that has to issue intermediate financial statement. So this encompasses both. So let's understand the first financial statements on the IFRS are the annual ones by this explicit and with no reserve declarations. We declare that those are the financial statements under IFRS and there are no exceptions. So at this time, we consider that our primary financial statements. There's a series of matters. The IFRS 1 applies only if the following is complied: is the local financial information are not consistent with all the IFRS. You should have financial statements that did not comply with IFRS. So this is the first time that you apply the financial statements, but you did not have a declaration that would state this. So even if you see here, you prepare a package of information, IFRS, to use it in the consolidation. There's companies that apply IFRS for its consolidation, but they have never applied them for a declaration. So it's in conclusion, I would say, if we haven't issued financial statements under IFRS for the public and general public under a declaration, so this standard does not apply. Oh no, this standard applies, but internally they never went public for the general public. Probably they were used by the banks, but you could have done something, but they weren't published or delivered to third parties.
In addition, you could have delivered, but you didn't issue it like that, so maybe it was not completed. So probably you have issued financial statements under local laws, using this as a supplement, as we used to do in Mexico, and still we use local regulations, and sometimes as a complement IFRS. That's what they are trying to clarify. So if you have not issued your financial statements with IFRS, this is going to be the first time. And when you change from local to IFRS standards, you can adopt new ones as an advantage. The particular case in Mexico, it is suggested. For example, fixed asset reappraisal or revaluation is not accepted in Mexico, but when you change to IFRS, you are going to put the appraisal as an attributed cost option only when you move to IFRS, and then you will continue with your regular policy without appraisal. That's the only time you can do it. Or you accept this reappraisal policy year after year, but the ideal is that only the first year is included, and then it is an attributed cost. And just like these, there are some other concepts that you can do for the first time. Sergio was mentioning something, and this happens a lot. Companies manage their local regulations, and sometimes they do match with the IFRS, in the case of estimates, they are not so different. However, they find some issues, they find some problems when it comes to apply some IFRS. They reserve for bad accounts or credit penalties were calculated as in the past. What was considered as a lost concept. Therefore, there was no IFRS adjustment. It was wrong. They didn't make a good calculation. So the reconciliation had adjustments to local regulations and then the IFRS concept. So these are elements that you can start seeing. If I have time, I will go in detail with all of them. So the conclusion is, if there's an IFRS that is used only for internal purposes, you assume that financial statements of this year are going to be the first, even if you had issued them in the past, but if it was only for internal purpose. And yes, it says that it had an explanation, and yes, it is just like that. What I was saying, changes in accounting policies done by an entity that had adopted IFRS when you had some accounting changes. There's a terminology definition here, and this is where I believe people, and even I, got confused. That's the reason for which I included this slide. And this is just an example. This is not real. In the real case for me is that a company hires me for IFRS accounting statements 2021. Yes, I will do that, but also for 2020 and 2019. Why? Because you have to have a comparison. So I need to do 2020 as well. I think this is wrong because this is January 31st. 2020 is not January, it's December 2020. So the transition date is December the 31st. The transition date. When am I going to transfer to IFRS? It would be December 31st, 2019 if I wanted for 2020. So that means that the balance, I should see that it complies with IFRS, as I said. Because then I'm going to have that balance under IFRS and then a financial statement for 2020 with IFRS, and out of the comparison I will have the result and it should match my P&L, and all those of 2019 will be reflected in 2019. So when I have the 2020 as balances were adjusted, then I will have the result in 2020 for IFRS, and then we turn to 2021. But if we want 2021, we need to work since 2019. Sometimes not well understood, but that's the rule. The explanation is that if you take any financial statements 2020 and you ask for the accounting capital, you will see the initial balance and then the results. And then we need to use the same basis And they should also be in IFRS. So, in order to match, we need to have 2019 with IFRS. So when we have 2020, then it generates the results of 2020. I'm going to rephrase. We have obsolete inventories of 2019 of 1 million, and with IFRS should be 1.5 million. Therefore, I warranty that this million in 2019, if we compare with 2020, seemingly there's going to be a charge of 500,000, but that's not true, because we adjusted 2019 to come in January to 1.5. This is a very quick example that I am mentioning. And we're just seeing this. And I need to see which are the adjustments for 2019 and then 2020 to come to 2021. It is important that this is understood, and if there's any question, please send them to the chat. I cannot say it right now. So the starting date is prepared as of December 31st, 2020, and the close is going to be also December, and the posting is going to be 2021, adoption 2020, and transition date 2019. This slide, when you are doing IFRS, when you are doing this, you need to check it out to see how long it would take. Because it is not only 2021, as I said, you need to do 2019 and 2020. Of course, hard work is in 2019 because we're going to review our policies, criteria, and everything that we need to do. How the IFRS submittal is going to be. And once it is well matched with IFRS, then it's going to be later on in the same way. But the work should be starting in 2019 with all the regulations in force as of 2021. Be careful. In some cases, if it is a new regulation, in some instances, it is allowed that you adopt it or not. But we need to see this in detail as we advance with the transition process. There you can see key principles, starting point for IFRS, that's the transition date, December 31st, 2019 or January the 1st, 2020. I usually use January 2020 if there is any appraisal. We do not mention 2019. But it is never going to be in the expert report. As I said, January 2020. But this is just a technical concept. And then retrospective application of the IFRS is December 31st, 2021, because everything has to be comparable to 2020. So that's retrospective. And this IFRS standard is to facilitate things. There are some optional exceptions and some that are mandatory. And what are you going to do then? Well, first clarify with the customer financial statements with IFRS as of 2021, the initial balance of 2019. That could be the work to do. I'm going to make a contribution. This is Oscar. Just to... Sorry, I cannot hear you well. Can I make a contribution on the previous year? Yes, let me know. Highlighting what Juan Carlos says, and I have a lot of experience. This is in the standard that Juan Carlos mentioned. Changes in accounting policies and estimates. As this implies a change in accounting policies, it means that the previous year you need to adopt balances to these standards for comparison purposes. And if it was a change in accounting estimate, then it wouldn't be retrospective, but for the present and the future. That's the reason. That's the fundamental reason. This is with the NIC 8. Yes and no. Precisely what I was trying to say was that let's not get confused. Accounting estimates are not modified because they are never modified due to new things. But estimates are modified when there is a mistake. That's what this standard says. Do not modify estimates due to accounting policy changes, but yes, please do so if there's an error. And also changes in accounting policies. You can change the accounting policy and estimates, but that's why I included the example of the customer. Clients or customers, it's an accrual. So if you say my accounting policy is not the IFRS, that you have expected benefits, and the local standard, it's according to an X accrual, as it was before, on what you had, or you had as a loss. You say there's an estimate that according to the previous standard was right, but under the new one is not right. Keep it like that. But if the local standard demanded you that it was according to IFRS, then it is not a policy change but an error. And I hope this is clear. Estimates should not be modified unless there is an error. And not only estimates, any element that you say, I am changing the policy and I'm going to justify this change. No. First, you need to see if it is due to a policy change or if it is a mistake. If it is a policy change, it's okay, no problem. But as Oscar says, certainly in estimates, it is not allowed for you to make any modification, provided it is well done. Accounting policies. And it would be with the opening as IFRS along periods that are presented in the financial statements according to IFRS. And this accounting policy will comply with each IFRS in force at the end of the first period on the report according to IFRS. Because they could say in 2019 they could say that there was a different IFRS. Well, no, it is not applicable, only those in force. And as I said, the transition provisions will not be applicable in this transition in an entity that adopts them for the first time. You cannot apply them. And entities can select alternative existing policies of IFRS once they are adopted. And that's why I also included reappraisal for businesses, and many other things. You can have the option of having an IFRS policy, and it's not going to be considered, as it was mentioned, those that are applied by the NIC 8. That could be different. 8 is when you have policy changes and comparable financial statements. This is different. You have a different policy here based on the IFRS. That's why it is not a policy change. It is to adopt a different. One thing is to change the policy, a different one is to adopt it. Why? Because those are financial statements, and financial statements of 19, 20, and 21 we have the X policy, but it's going to be applied to 2019, and then you can make the comparison, right? If it says, I have the policy up to 2020 with this policy, but I want to change it in 2021, then you have a policy change, and then NICSP 8 would be applicable. That's why I didn't want to mix it up. Forget about the NICSP 8. Focus on this. A unique moment to reassess policies and select the one that best reflects the entity operation. That's why it says unique. Unique moment to reassess policies and choose the one that best reflects the entity operation. So we need to assess to select which is the most convenient. That's why I was including reappraisals, because you can choose not to do it or do it. If you choose not to, that's one thing. And you can have the policy that you want to make a reappraisal. And each year you will have to do it. Or you can opt to say, I'm going to use the first exercise reappraisal, and this is going to be like my cost. Then the policy will include the attributed cost, and then you continue with the same exercise. The thing is that we cannot go deeper into details, but we need to check in this standard which is the policies that we can adopt, and I can change them with no problem right now. The only thing is that we need to see the example, the accounting policies that are used. Sergio, how are we doing with time? How much I have? 2 minutes. So yes, I'm going to show you the example because this is the top visible. We can give you 5 minutes, no problem. Here, this is obvious things that wouldn't be accepted. This is obvious. For me, this is obvious. If it is not IFRS, remove it. If it is not classifiable, take it out. But all adjustments, we have these ideas. And I have a summary here of everything that should be presented, the typical things. The only change is that we have 3 financial situation statements. 2019, 20, and 21. And in the next year, only 2. And also P&L, etc. And also disclosures. It should include all the IFRS. And the first, we need to use all the disclosures requested plus specific disclosures for this standard. There are no extensions to disclosures. There are some options for acknowledgement and reappraisal, business combination, participation, etc. And there you can see that we need to reconcile accounting capital, etc. We have here the estimates according to IFRS, and this could be coherent with those estimates done for the same date after making necessary adjustments to reflect any difference in accounting policies, unless there's evidence that they were wrong. And that's exactly what I was saying. Estimate adjustments are banned in those done according to NIF. It doesn't mean that we will do it like that. When there's no difference with IFRS, I will put it, no. We need to consider if the previous estimate was right or wrong. And I was talking to a friend that makes expert reports at the stock market, and he said, we found some differences when we were changed, but there's not so much difference. And then he said, we had made a bad interpretation of our standards, and we realized that it was a mistake when we were reading the IFRS. We realized that we were making a bad interpretation of local regulations. And we used to see local standards that someone does, but it is not so well described as it is with the IFRS. There's no difference, but there is a mistake. That's why I can say that with the local standard, there are no differences regarding the standard. But there could be an error in the interpretation, and then you need to correct. And this is very constant. According to my current experience, there are many errors, many interpretation errors. And I was saying there are no differences with IFRS and Mexico standards, and there were many differences, and I was asking why the local statements were done according to a different example. It was not well analyzed. That's why you have so many differences, and it shouldn't be like that if they were well done. So this is just one experience. Sometimes you say you have these financial statements according to these standards that are very similar to international ones. I will charge less. No, be careful. We need to see that the local ones are well done. You are responsible of that. Then you need to assess to determine whether they are right or not. If not, then you need to do everything again, not only the differences. And I've seen, yes, there are very little differences, and I charge $40. If financial statements are well done, and if they are well done, then you have to make them again, as in my case. They are forced to this. So, due to my time, I'm just going to show you this example of a company issued in 2012, January the 1st, 2012, compared to 2012-2011. A finance person will say, it's okay, explanations are okay, but they can wonder. I had in property 5 million and I have 7 here right now. That's why the standard says There you can see the results 2011, 2012. Here, accounting policies, results, explanations. Here we have explanation. They are consistent. An explanation. Here we can say, you had these figures before, according to my financial statement. However, I had to make these adjustments. This reclassification to come to IFRS reconciliation. And here the difference. We explain why we made these movements. That's reconciliation. There are some other forms, but I think this one is the most executive. A finance person can see this and compare against previous and now, and I can see the corrections all, and explanations are at the bottom. Revenue, I had this result in 2019. I think it was 2011. These are the adjustments for new results. That's the explanation you are given to the financial statement reader. The truth is that they are 2012. And explanations are there. Adjustments, amortized cost of loans. And I'm reading this explanation. They used the interest method according to NIF in Mexico. First, they say how you used to do it. NIFs in Mexico, these were acknowledged as deferred charges. So they explain each adjustment. According to my opinion, this is not the rule. The standard needs to reconcile. How? With your account. I think that this is the one that is the most executive. Currently in Mexico, this was issued in 2012 or 11 when we had more differences between IFRS and Mexican ones. That's why there are many differences. Currently, the ones that I have seen, they have no differences. Anyway, I'm including them. So there is no question about this. These were the ones that you had. There were no changes. Okay. Because no changes are expected right now in Mexico. They were really very slight. With this, I close, and I hope it is useful. This is coming with the material that you are going to receive, and thank you very much.